All right. Hey, everyone. Welcome back. It's Monday, and this is the my day trade stream. So let's get right into it. So what I'm going to do, if you're new, let me just explain real quick, and then we'll get into it. I'm going to attempt to trade the NASDAQ futures, the MNQ, the micro NASDAQ futures, to see if I can advance my Apex evaluation account. Over the previous 3 sessions, I've just given back money the whole time. So it's been a tough week. The previous week, let's see if we can make some of that money back. All right. So first thing I'm going to do. Oh, so just so you can see the account here. All right. This is the account. P&L now is at 49.9 whatever. All right. I was at like 51, and I gave $1,000 back. Keep in mind, I started out -8 something in this account, so it's just been fluctuating over the whole month. Oh, and by the way, real quick, if you saw my Bitcoin analysis, I'll be doing my stream at three o'clock Eastern time today, my analysis stream. But I called it. Okay, I was calling for a bear flag. If you read my analysis yesterday, I was calling for a bear flag. This is the bear flag. So if anything, you should have known not to be going long there, if anything. All right, let's switch these charts over. I'm not going to spend a lot of time here on Bitcoin. So MNQ1, okay, that's the NASDAQ, micro NASDAQ. I'm going to change this one over, MNQ1, okay. Now, I like to look at 2 time frames, as you know. We're going to switch this over to a 1-minute chart because that's one of the time frames. Look at that move. And then we'll begin here with our daily time frame. So what I'm doing here is I'm using the Trade Scanner Pro, okay, to attempt to do this. Let's see who's watching here. Oh man, I don't know why I do this. Seriously, I say that every week, but I'm looking to make some changes to see if I can improve my numbers. If my numbers don't improve, like I'm not going to keep doing this. Just be honest. I'm just being honest. There'd be no point in me continuing to do this if I don't see any improvement. I mean, my numbers are going the wrong way, and I know I'm supposed to be patient and give it some time, but during that time, I would think my numbers would at least increase the right way. Slightly, even slightly. I don't even see that. So anyway, um, so here's what I like to do. Let's get to the Trade Scanner Pro. I don't want to rant the whole time here. We can't waste time. I'm going to monitor 2 time frames. Now keep in mind, when using the Trade Scanner Pro, you have to know what time frames you're going to trade in advance. Whether that's 5-minute, 15-minute, 30-minute, 1 hour, you need to know that in advance. If you don't know that, don't waste your time. Don't subscribe to it. All right. So you need to know. You need to have some sort of experience. I would say you should at least understand the time frame that you want to work on and all that kind of stuff. For this stream, I'm working on the 30-second and the 1-minute time frame. They're very hard time frames to trade. Okay, you're better off working with a 5-minute or a 15-minute, but I want to demonstrate this on these time frames so that we can have signals to take. Now, the first thing I like to do is I like to start with the daily time frame, right? But the daily time frame, I'm not looking for trend here. All I'm looking for are today's levels and yesterday's levels. That's it. So we can begin with yesterday, which was Friday. That was the Friday low. Then we have the overnight low. Then we have Friday's high, which is over here, and we have the overnight high, which is over here. That's it. That's all I need to do. All right, so that job is done. Now I'm going to go to an hourly time frame. The hourly time frame is going to give me a sense of momentum. Between the levels and momentum, I should be able to determine what side of the market I should be using the Trade Scanner Pro on. Remember, the Trade Scanner Pro is a confirmation tool. It's not a forecasting tool. So I need to do this analysis portion. So I have my levels. Now this momentum, I think we can agree, it's pretty simple to see here. It's bullish. Okay. I see a higher low over here, right? Looks like a higher low. We had a nice initial move back here, right? This was Friday. Then, overnight, between, Sunday, the Sunday overnight, or whatever, we started here or whatever, right? And look, we're basically trying to push that resistance. So this momentum right here, that's all I need to know. This momentum is bullish. Don't be confused by this, right? This is bearish back here, but this is breaking, right? It's changing because if this was going to continue to be bearish, hey, Hussein, if this was going to continue to be bearish, we should not have a higher low. First of all, we should not have a higher low. And second of all, we should not have this candle, right? We should not have this. Now, if over the next hour, if this candle gives it all back and we have something like that, okay, then we're still bearish. All right. But the market's going to have to prove that. I can't guess that in advance. So I'm going to go with this momentum and I'm going to lean on the bullish side. Right now, we are at resistance levels. So this may not be the best price to be going long, but I want to see if I could lean on the long side. So that's the plan. Okay. Now I'm going to switch over to my 30-second time frame. And I mean, look at these small time frames. Look at this. I mean, that's a nice sharp bullish move on there, right? Look at there was some long signals here on the 1 minute. Okay, cool. So I'm going to try to work with that. Now, we are fooling around at a resistance. If my momentum is truly bullish, the resistance should break, right? In theory. So, but I need to be aware of where I am. So let me turn my Trade Scanner Pro on, right? When you get the Trade Scanner Pro, remember, you have to turn these on. If you don't turn these on, you're wasting your time. All right. I'm going to be very straightforward here today. So now, so my Trade Scanner Pro is on this time frame. Is it? No, it's not on. Let me turn it on. There it is. Now it's on. Okay. I can see the same signals here as my 1 minute. Now here's what I'm going to do. Because it's been such a tough previous few sessions, I'm going to make some adjustments. Now, I'm not changing my system. What I'm doing is I'm just going to adjust the rules a bit so that I can be more defensive in case this market continues to be hard, right? You have to adjust to your environment, and not every environment is going to be easy. The problem that we've been seeing is lack of follow through. So I would get signals and they just weren't following through, right? So then my trade eventually gets stopped out. And a couple of times of that and I'm done. I'm not going to keep going. So here's how I'm making the adjustment. And by the way, this is very valuable information because you're not going to learn this in a book. What I'm going to do here is, as you know, the Trade Scanner Pro produces a signal, right? That's the confirmation. But instead of taking the initial signal, like I've been doing, usually I try to wait one candle, right? And then I try to take the signal. But here's what I'm going to do instead. What I'm going to do is I'm going to wait for the signal, and then I'm going to wait for a re-entry. And I'm not going to take any trades until I get a re-entry trade. How many times have we seen these re-entry trades where you get the signal, it pulls back a bit, and it gives you another opportunity to enter? So I'm going to use that as basically like a filter to help filter out some of these bad trades if there's going to be lack of follow through. So that's just, I'm just introducing an extra layer, an extra rule just for this environment. So am I changing my strategy? No. All I'm doing is I'm adjusting my justification to enter. So I'm still waiting for a signal, right? But instead of jumping in, I'm going to wait for a re-entry. Again, this is not something you're going to learn from a book or from trying to figure it. You're definitely not going to learn trying to figure it out on your own. Definitely not going to learn. All right. You have to be trained, and I'm training you. So, oh, in 3 hours? Okay. Thanks. Thanks, Hussein. I haven't checked the calendar yet. That's good to know. Powell's speaking today. Also, this week's the first week of the new month, so Friday is non-farm payrolls. But it's interesting that Powell is speaking today. Good to know. In 3 hours. So that means we may have some action here. Usually, it's important to know that Powell is speaking. So again, thank you for pointing that out, because the market may get very erratic, especially going right into his speech. And the market can spike like just unexpectedly if he says something that the market wasn't expecting. It could spike one way or the other. So it can become tricky. Oh, and by the way, another thing that I'm doing to adjust to this environment, another thing I'm doing is I'm keeping my size at one contract. All right, one micro lot. Now, doing this re-entry method, which I'm planning to do here, we're getting a heads up. Doing this re-entry method, what I'm going to do is, if I may have an opportunity to add once or twice, right? That's why. So if I'm on one micro lot, then I can easily add, because I'm not taking position sizes that are too big. So I start out with one. If I have the opportunity to add two, I will add two, right? But I'm not going to start out with two. So those are the two adjustments for this environment. So let's see how that works. Let's see if I could get a better result today. So we have a heads up here. There's a signal. There we go. Right now, I'm not going to take the signal. Now, by the way, this may be a good trade, and I'm willing to miss it. Right, but this environment has been so hard. I'm willing to miss. Like we may get like a spike straight up. I'm willing to miss that because how many times have we seen these reentry type of trades? How many times have we seen them? We see them a lot in this environment, right? Because we have lack of follow through. So here we go. By the way, this is a 30-second chart. So things could look more dramatic and this and that than they really are. So you don't want to react to them. See, like, so normally on something like this, like if this candle closed green, I would jump in, right? I would take this long if it closed green. That was the previous, right? Pre-adjustment. Now, after the adjustment, as you can see, I'm not doing anything. And as you can see, this thing is not really going anywhere either. All right. Now, so the reentry would basically be what? We don't go to the stop, right? It doesn't get stopped out and it goes back above the blue line. All right. We get like some kind of green candle close, some kind of strong close inside of, within the, what I like to call this the risk gap, right? This is the risk gap because that's how much risk we're taking. I'm not in the trade, by the way, right? And look, it's going straight to the stop. Okay, cool. There's a stop. I was able to sidestep. I was just able to avoid that. It's gonna get stopped out. Now, if it doesn't get stopped out, all right, stopped out. See that? I was gonna say if it doesn't get stopped out, I may have a reentry opportunity. But do you see? So that rule just saved me some money right there. How much was that? Let's see. 31 points. Okay, so I just saved myself 31 points. That would have been minus $60 on one contract. So you see what I mean? Like a rule can be very helpful. A simple rule adjustment. Very simple. All I said was I want to see reentry signals rather than taking the initial signal. Okay, because this market sucks, right? Lack of follow through. So maybe we'll get another signal and I'm going to do the same thing again. I'm going to wait for a reentry opportunity. So you see, look, this would have stopped me out if I was in the trade. And now it's giving us a heads up for another signal, right? So that's why you just, instead of being more aggressive, you just be less aggressive. And if I have to sit here for an hour and I don't really get any trades, then I don't get any trades. Zero is better than a negative day. I'll take zero. My previous couple of days, minus $300, minus $400, minus $200. Zero would have been much better, wouldn't it? Right? So if I had 0 days on all 3 of those days, I'd still be up $1,000. So zero is better. All right, so let's see. My 1 minute's pulling back. Now remember, look, we came off that resistance, right? The resistance stuck. So it's a good thing I wasn't aggressively going long up here. That would have been problematic, but the resistance told me not to do that. That was pretty clear. Some people may have gotten long over here, right? Oh, high or low. No, not a good location. Not a good location. So nice pullback. Okay. So remember what I said before? Maybe the market wants to give the whole thing back. Let's go to our hourly. Look at the hourly. Look at the pin bar developing on the hourly. Now we still have some time before this thing closes, but we break that hourly low, then this thing is not bullish anymore. It's bearish, right? So these things change. And they change a lot, especially when you're looking at a 30-second time frame. So I'm still willing to work on the long side now that we've pulled back a bit. Let's see what we get here. These heads up let us know that a signal is likely to appear in the next 3 to 5 candles. Okay. Look, my 1 minute is also starting to give us a heads up too. So right now we're just getting a decent pullback. Is this thing going to keep going, or is this thing going to find some support somewhere around here? I mean, I'm nowhere near the supports that I drew. Look, I mean, I'm nowhere near those levels. See these levels over here? I'm nowhere near these. So I don't have that support to work with. I'm going to have to look for support in the middle of nowhere over here. The market's going to have to prove it. So let's see. Now, so I'm going to do the same thing. I'm going to wait for a signal, and then I'm going to wait for reentry opportunities. Simple adjustment. That adjustment just saved me 31 points. All right. So nice lesson there. See anyone watching? All right. I guess see a couple more numbers over here. Not much. Yeah, like I said, people, I'm going to give this, another month maybe or something. If my numbers still stink, I'm just not going to do this because I could be involved in the real market right now. I could be doing some real things, right? Instead of this. So, I mean, my numbers don't grow. I mean, I'm planning to make some other efforts as well. I'm planning to do some other things, not just this, because clearly streaming alone doesn't do any good. You know, the algorithm doesn't spread this at all. Like it just doesn't do any good. I have to do other things. I have to produce other content. Otherwise, this is not going to grow. So I'm planning to produce other content. I know I've been saying that for a while, but I'm like I have like a plan. So now, if I produce the other content and this is not going anywhere, then something's going to have to get cut. All right, here we go. Next signal. Same thing. Not jumping in. I'm going to see if we get a reentry. Now, keep in mind, I'm going to repeat myself here. It's very possible that one of these signals is going to go like that, and I'm going to miss it because of my rule. That's part of the deal. Like you can't have everything. You know what I mean? So I'm being more conservative here. Let's see if this turns into a reentry. How big is this risk, by the way? Let's see. 35 points. Okay. So look, right away, red candle. Okay, cool. I'm not in it. Let's see. Now let's see what kind of candle we get here. This may turn into a re-entry opportunity. So a re-entry opportunity is very simple. It pulls back a bit like this. It does not go to the stop, and it goes back up to the blue line like it's doing. Okay, I'm going to give this a try. Here we go. I'm long. All right, that's a re-entry opportunity. That's what they look like. It's just basically it goes back above the blue line. Now, that doesn't guarantee that this trade is going to work. It's just I believe that it's a better probability that it will follow through if it does not go to the stop, like here, right? It almost went to the stop, and then it reversed hard and went back above the blue line. Now, this thing may pull back again, fool around inside here, and go back above the blue line again. May do it, see? Just like I just described. It can do it. Let's see. Now, if it does something like that again, I may take a second contract because that's the whole idea of reentry. I may do that. Let's see. Like if we get like if it looks ugly and then it turns right around and gives us a nice big candle like this, I'll take another one. But right now I'll just stick with one. Okay. I don't have any signals on my 1 minute yet. I'm monitoring that 1 minute. I only have one contract. There's our 1 minute signal. See that? That's good to see. Now, the 1 minute is even better for reentry because it takes longer, right? So maybe we pull back and we fool around, right, inside this 1 minute risk gap. Risk gap. I'm trying not to get too fancy with the words. The risk gap, all it is the entry between the entry and the stop. I don't want to sound like ICT with all the fancy words that mean nothing. Okay, trend. They explain trend is all. Well, it's a market maker sweep. Blah blah blah. This and that. You mean trend? You mean support and resistance? Right? All these fancy words. Okay, here we go. So maybe this turns into another reentry opportunity. If it does, I'm going to add a second contract. If it doesn't, it goes to the stop. I bang it out and I lose on one contract instead of two. Okay, look at the 1 minute. The 1 minute turned right at that blue line. Now let's see. This could be an opportunity. So the great thing to learn about this is don't take the initial signals. See if you get another opportunity to add. This is also very important when you're dealing with larger time frames, like a 5 minute, 30 minute, whatever, because you're going to see this type of stuff a lot where a signal has been in play for maybe an hour, maybe a day, and you miss the initial signal, but you have other opportunities to get involved. See this? This sucks. This stinks. Good thing I only have one contract. Now, if it turns around, that may be an opportunity to add. If it doesn't turn around, I stop out. Very simple. So let's see if we get a nice little green candle here and we start pushing back up through the middle here, I'll buy another one. All right, so that's what I mean. Don't take the initial signal. wait for something like this, because this market, there's no follow through, right? This market sucks. In a high momentum market where there's follow through, that's where you want to be more aggressive jumping in. See what I mean? Look at this candle. All right, I'm going to try a second one here. Where is it? I pressed the button. All right, maybe I have to press the button again. All right, I'll wait a minute. I'll wait. Okay, there's the close. All right, I'm going to take it. There we go. No, of course, now it turns red. All right, whatever. But the thing is, I just put on a second contract at half the risk. So if I lose on these two, now I can put 2 over here because I want to bang out 2 if I'm wrong. Now I'm not taking the full risk. Okay, so half of 35 is what, like 17 points or whatever? That's a pretty small risk, relatively speaking. Oh, that's not good. What time is it? Must be 10 o'clock. Okay, so hold on. Because that's a 10 o'clock candle, I may have to bang this out. Now, here's what I'm going to do here. Let's see how this candle closes. I hadn't realized I was going into the 10 o'clock candle. I hate the 10 o'clock candle being in a position because it can go either way. If this thing doesn't spike back up the other way, I'm getting out. So the only reason why, like usually I bang it out right away at the stop. The reason why I'm trying to give this a little bit of a chance is because it's a 10 o'clock candle. Okay, it's not working. All right, goodbye. Out. All right, so I gave it a try. The 10 o'clock candle got me. How much does that cost? Let's see. Ooh, that doesn't look good. Let's see. $234. That's because I had 2 contracts. I tried. And the 10 o'clock candle. Now, keep in mind that 10 o'clock candle could have went my way also. So, I'm not going to keep pushing it. This thing doesn't want to follow through. Let's see where we're at. We're nearer that support now. Has my trend turned on this time frame? Let's see. Yes, it has. They turned the momentum on these time frames has turned bearish. So, and we have lower highs and lower lows. So all that bullish move was given back. All right, no problem. I'm not going to fight it. At this point, I mean, if I continue to wait here, I'm going to get bearish signals because these things have both switched to bear mode. I'm not going to look for longs right now. Right? I tried that one long. I missed this one. Good thing. Right? This one, they stopped me out. Now let's see if we get the lower high. So if this thing is going to be truly weak, right? I may have to adjust right here. If this thing is going to be truly weak, then we should not go above this area right here. Okay, so let's see if we get a short signal. I'm not going to change into counter trend mode. Nothing. I'm not going to do any of that. Let's just see what the market does. So if this trend is going to stay intact, we should not break this area. If we break this area, if we go back above this area, that means this is not a bearish trend. All right, so let's see what the market chooses. Now, maybe we get a lower high over here or something like that. I'm not going to do anything if there's no signal. So what I'll do is I'll switch my size back to 1 contract over here so that if I do get a signal, I'll be prepared. See, like they shook me out of this. I banged it out. And look, I mean, actually, if I was still in that trade, I'd have an opportunity to at least give it a chance. See that? The 10 o'clock candle will do that to you. So now we're just going to wait and see if we get bearish signals. Man, it's tough. It's been tough. When these markets transition, when they go from bearish to bullish or bullish to bearish like that, that's usually when you're giving it a try on one side and then it breaks. That's what happens, man. There's just no way to know that you're going to get that. When trends stay intact, that's when things make sense. But when things are like this and it's constantly changing, it's hard. So if you're having a very hard time in this environment, the easiest thing to do is just not trade. Just walk away. Take some time off. or just trade smaller. You have to adjust a bit. Like I'm trying to adjust here. Okay, look, we got a signal. That's a long signal on the 1 minute. Okay, that's interesting. I guess the 1 minute switched back to long. What about this 30 second? Is this thing long too? No, 30 seconds still bearish. All right. So let's see. Maybe we get some kind of higher low situation over here. But I'm not, no, so no, notice I'm not jumping in. I'm still following that rule of the filter. Now, I really would like to see if we get a short signal because we haven't broken above this area yet. So this thing still may be weak. But here's the thing. The nice thing about the Trade Scanner Pro is I'm not sitting here like guessing and saying, okay, I'm going to try the short side now. This may be premature. I don't know. That's why I wait for signals. That's the whole point of this. So let's see. This may turn into one of those situations where you have a long signal here, and then you get a short signal here. That's confusing, right? That can be very confusing. You have to go with the side of the momentum of the chart that you're in, right? Like I said, we set a standard here. We said, okay, if price cannot get above this area, it's probably still bearish, right? So if that's what I'm going to go with, that's what I'm going to go with. But now the conflicting thing is, what if we get a higher low over here? What if we get a higher low? We may get one. And if we get a higher low in that situation, I mean, what's happening here? Oh, this trend is still bad. This is bearish. Like, this is pretty clear. That's clear, pretty clear bearish. But we should make the lower low. Okay? If we don't make the lower low, and see what's happening here? Higher low. We have an outside bar over here. Okay. How much time do we have till this one closes? All right, we have about 30 seconds. So I may try one contract long on this side. I'm taking half the risk. I may do that. Let's see. I want to see how the candle closes. We still have about 20 seconds left. I mean, it looks nice right now, but this may close red. Okay, like you just don't know. That's why you can't react to a candle like there. See what I mean? See? So that sucks in longs, and then it's not going higher. So that can happen to you if you're reacting just to candles. Okay, we got a green close, but it's barely, right? We got a pin bar. All right, there's a higher low over here. What's my risk? Well, all right, I'm going to try one. We're getting some green follow through. Okay, so I'm trying one long. See if I can make some money back. What I'm betting on here is the higher low. There's a higher low right there. Okay, and while this structure is bearish, this is what I'm recognizing, right? I'm going to show you. When we go to the hourly chart, the structure is bearish. Okay, that bearish structure is this pin bar right here. See that pin bar? That's what we're looking at. But look at this. Higher low. So is it really bearish? It's very tricky. This structure hasn't changed. Okay? So it's tricky. It's very tricky. This is why like you have to check these other time frames. See what I mean? So the 1 minute signal kept me on the right side. Now here's the thing with this. All right, so I got one contract. All right, it's better than nothing. Maybe I'll have multiple opportunities to enter, right? Because maybe this thing, the way we've been seeing this price action, we haven't been seeing straight lines like this. We have not been seeing that kind of action. So maybe what will happen here is maybe we'll pull back into here somewhere, and maybe I can add. Let's see. But see, it's why it's very hard to be aggressive, and this is definitely an environment where you should not be aggressive. I think it pays to just be more conservative, smaller size, less trades, more rules, you know? Right. You have to take chances. I mean, that's what this game is all about, risk. But the idea though is, when things are harder, we want to be tighter on risk. But you still have to take a risk. It's just you can control how aggressive or conservative you want to be. Right. So some environments call for being more conservative. Some environments, like back in April and early May, right, I was having a lot of good trades. I was being a little more aggressive, and price would follow through. I'd have a good trade, and I'd turn it off. Great. But this environment, we're seeing a lot of losing trades. I'm not. I'm doing the same exact thing. So another thing that you can't do is you can't take it personally. It's like, okay, look, I'm streaming. It's not like I have thousands of people watching me, but even if I had thousands of people watching me, it doesn't matter. Like, I can't control the market. All I can do is control the risk that I take, right? And try to do that effectively. The market's just going to do whatever it wants to do, and it can change at any moment. So I don't read it right. I have to adjust. I mean, even in my trades outside, because I don't just trade this. I have my other accounts. I've been having a hard time there as well. So I've also been pulling back and just being tighter, or just walking away completely, because I recognize the environment. Right? Why bang your head against the wall? So, all right, so maybe this may turn into an opportunity to add. Let's see. So it looks good 1 minute, and then it looks bad. So we're back at the blue line. See, like that could be a reentry opportunity. And you'll see that more on the larger time frames. Like, this is the 1 minute. We don't even have a signal on the 30-second. This is why we monitor both. All right. Now, if we get a nice strong green candle from here somewhere, then that may be an opportunity to add. We'll see. Now, again, this is a technique you want to use if you're watching a 30-minute chart, for example, right? 30 minutes or whatever, 30-minute, 5-minute, doesn't matter. Anything longer than a 1 minute, it's the same technique. Because often what you're going to find is you're going to find a trade that's been in play for a while, and you'll be like, I missed it. But really, have you really missed it? Or is it giving you opportunities to get back in? Really missing it means you're up here. If you're up there, you missed it, right? You don't want to be putting on trades up there. But if you're still fooling around in here, then you may have an opportunity to get involved. All right, so like, this looks bad. Let's see, I only have one contract. If this goes to the stop and I get blown out of this one, I'm just not going to continue. There's just, it's just pointless. Because I mean, is this thing a short? It's very conflicted right now. If this thing was a short, we should have made the lower low, not a higher low. All right, let's see how does this close. Oh, we have some time here. All right, I like this candle. All right, I had to take it because we see we're strong. We're going strong. We went through the blue line. I should wait for the candle close, but I like this candle. I mean, it's tough on a 1 minute. I still have 30 seconds left. It may close red on me, but what I like about this also is it's a higher low. So in theory, we should get a higher high. And if the shorts get squeezed, we should see something like this. All right, this thing should be closing in a couple of seconds. All right, that's a decent close. All right. So, again, these are hard situations. This move right here is going to cause a bias. People are going to think this is a short. Like I was saying, okay, it's probably a short, and it may still be. But then we have this conflicting structure, right? Like, what is that? If this is a short, then this thing should be blowing through these lows, not developing a little strength here. And the other thing we have to keep in mind too is, let's just not forget the bigger picture, right? Keep an eye on your hourly chart. We have, what is it, 10? Okay, it's almost 10:15. This chart, this is not bearish. We have to keep that in mind. This move was bearish, the pin bar part of it off the resistance, but this is not exactly bearish. right? It's coming from a higher low. So see that? Like, so I can't lose sight of that. It's very easy to lose sight of that when you're focused on smaller time frames. So I mean, I can't sit there. That doesn't guarantee anything. It's like, okay, it's a long. It doesn't guarantee anything. Hey, how are you? I can't see you. Let me see. What's your name? Voiniska. I can't pronounce it. All right. Nice. Thanks for joining. Good to see you. Thanks for saying hello. All right. So let's see if we get a little follow through here. If we can get at least close to the profit objective, I'll be happy to take something off the table. We'll see. I don't have my trailing stop hasn't gone into effect yet, but if this trade continues to sustain itself in my favor, we'll see a trailing stop start to pop up in here. Eventually, it takes some. The trade has to go in my favor for some time. There it is. All right, there's a trailing stop. See that yellow thing? That's a trailing stop right there. It's going to if this trade upon each closing price, the trailing stop is going to start following the trade, and that's going to help to reduce the risk. Again, if you have to respect these levels. If you don't, then it's pointless. So let's see if we can get some kind of favorable action here. Now, if you have missed, once again, if you've missed the trade that was called back here, you still may have some entry opportunities if it goes back below the blue line and back above. Now, if that happens, I'm not going to add a third contract. So I've been using that reentry technique to be a little more conservative with my entries. And it saved me a little money in the beginning because there was a complete total stop out in the beginning, which I was able to avoid using that. That's the whole idea. Because follow through has been so limited in this environment. At least follow through on the side that I've been, because if I was shorting this thing over here, yeah, I would have had some follow through. But this is where a situation like this invites a lot of shorts because they're looking at this. Okay. And I made that mistake. I make that mistake. I still make that mistake sometimes. They're looking at this and they're saying that's bearish. It is bearish. Just like I was going long because I was looking at this. So looking at those previous moves, I mean, theoretically, this move doesn't really mean a whole lot going forward. It really doesn't. We can't get too anchored on this. It could be a reference point, but when you see a change, right? Like if this move was still in play, we should be breaking supports. We shouldn't be developing supports. So you got to look at both sides like that. It's hard to do on these time frames, especially. It's hard to think on both sides like that. It's hard. It takes some time to develop that thinking, and it's not something you're going to learn in a book or whatever. Like I'm giving a lot of value in these sessions, and no one watches them. I get a couple of people who recognize it, but most people do not appreciate this. Most people don't. They want they want the Ferrari in the background. What am I going to do? No Ferrari. So, and the YouTube algorithm doesn't like these streams either. I get nothing. I get no love from the algorithm, but that's my fault. That's my own fault because I'm just not doing the right things. So, I spend a lot of time researching that and looking, watching other YouTube videos and stuff. Like, what is it that I'm missing here, right? So, I'm not a very good YouTuber. Like, I'm not very good with the marketing. I'm not very good with optimizing the videos. Like, it's a lot of stuff, and I don't, I'd rather just trade, to be honest with you. But there are people there that just focus on that stuff and they don't really trade. A lot of these frauds, they don't even trade. They pretend to trade, but what they're good at is all these little details. Like you have to upload a certain number of videos. They have to be uploads, not streams. They have to be optimized. The thumbnail is very important. I realize these thumbnails that I have on these, they're suboptimal. Now, when I made these thumbnails, I'm like, oh, I got some good thumbnails now. I came across some videos that were talking about thumbnail analysis. My thumbnails are not that good. They're better than what I had, but they're still suboptimal. So what does that mean? It means I have to go back and I have to make some adjustments to these thumbnails. Because the thumbnail is a big part of this whole process, by the way. If your thumbnail doesn't attract anyone, then no one's going to click on your videos if YouTube does put you on the feed. So stuff like that. You know, I'm a trader. I'm not a marketer. Anyway, that's my rant. I'm hoping as I rant that the market goes in my favor. All right, Hussein, what are you saying over here? Let me see. Maybe short content. Yes, I agree. I agree with that, Hussein. In fact, I've been experimenting with that, like shorts, YouTube shorts and stuff on Instagram, the reels and stuff like that. I have to do that. But that kind of stuff is what's called top of funnel. So I have to have something for people to go to after the short, right? And I don't really have like what would be ideal. These streams, they're probably not going to watch these streams after the short funnel because these streams are long. They don't know who I am. They don't want to waste their time, right? That kind of thing. So the shorts are like top of funnel. Then what I need like 10-minute videos. The 10-minute videos, like training videos, for example, that would be a good place to bring people to. So then they can watch, they can learn, and then from there they see I have live streams, and then they can come to the live streams. So it has to be organized like that, like a funnel. And I understand the concept, but I got to do the work. So shorts are definitely a big part, a piece of the puzzle that I'm not doing. And shorts are pretty easy to do. Like, sure, you could repurpose stuff. I've been looking into repurposing, but I can also I have the ability to make a short, like on vertical video. I can do it with this platform that I'm using here, and I could make them very easily. I can do like a quick analysis. I can do a quick lesson for 1 minute, right? And there's no excuse. I should be making 1 minute videos. But at this moment, if I make them, and I plan to anyway, they're probably not going to do me a whole lot of good because again, they're not. I don't really have any content to bring people to. I don't think my streams are going to be um, that middle funnel type of content. I could be wrong, but I'm definitely going to do shorts, no question. But thank you for the suggestion. I spend a lot of time researching this. I watch a lot of videos, and it takes time to like consume the content, think about the content. I'm slow, and one thing I'll tell you, one mistake, one thing that I don't do, which is very important, that a lot of these YouTubers do, is they hustle. I don't hustle. I'm lazy. I'm just gonna be honest. I'm lazy. After I do this stream, then I want to trade on my own account. Then I want to have lunch, and then I want to, and then I have my stream in the afternoon. And after that, I want to take a break. I don't hustle, right? These people that do YouTube and they grow a nice following. They hustle. They're putting out a video every day. They're putting out a couple of pieces of content every day. Okay, and that adds up. I'm not doing that. I'm doing a couple of pieces of content per week. Right? I can't compete with these hustlers. So what does that mean? I have to hustle. That's what that means. I'm lazy, Hussein. I'm lazy. I need to stop being lazy. So first, I have to formulate some ideas and figure, okay, what am I going to do? How am I going to hustle? What kind of content am I going to make? What's the workflow? What's that going to be like? It has to be as simple as possible. See, like perfectionists, YouTube is not a place for perfectionists, right? And I tend to be obsessive like that. Like, oh, I don't like this little thing here. I got to change this. Oh, I don't like that. And I have 10 million excuses. Oh, I can't do this. I can't do that. I can't do this because I have to do this first. And you can't do that. You just have to do. It doesn't matter if it's not perfect. You just have to do. And then you go from there, right? It has to be simple. Yeah, no, I agree. I agree, Hussein. No, and I get good feedback. Like if people are telling me your content sucks, I learned nothing from you. I mean, like if I got really negative feedback, but I don't, I get positive feedback all the time. And I don't think people are just being nice, you know, because these people have no reason to tell me anything nice. Um, I may take a contract off here. And I believe my content is valuable because I'm giving you valuable information. It's like, this is information that I use, and I know that it works, and I have a lot of experience, right? So I know what I'm giving you, and people do respond in a positive way. I've been doing this for a while. It's not like I just started doing this, with this YouTube stuff. So I provide value, but value alone is not enough without calling attention to it. And I thought, just, because again, I'm lazy. I thought, just like, I'll just show up and everyone will just like me. Oh, I'm a CMT. That should be good enough. No, it's not. No one cares. So YouTube is a very cold, harsh place. And if you are lazy, you're just not going to get anywhere. And that's why I think I can't blame anyone else but myself. So I know I cry and I complain all the time, and I'm going to start drinking. I joke about, but it's just, I'm just trying to be funny. The reality is I'm lazy, and I have to fix that. So first I have to start with a plan, and yeah, that's a little bit of the anal part. It's a plan. I got to spend a little time figuring out, okay, and I've been doing that. It just takes time, and I just have to be patient. I'm new here. Do you have hey, Minnie, welcome. Not every day, every other day. Monday, Wednesday, and Friday. I start at like 9, a little after, like 9:30. Yeah, something like that. Sometimes I start a little bit behind, but yeah. Monday, Wednesday, Friday. I do the NASDAQ futures, like 10 million other fake gurus. And you know, I try to be entertaining, but I also try to deliver a lot of value so that you can learn. And I'm demonstrating the Trade Scanner Pro. So you could go back and watch. If you go to my channel, you'll see all the streams. There's a lot of value in these Trade Scanner Pro streams. I don't always win. In fact, this previous week has been a very tough week. And this is my first green trade. I don't want to say anything because if the market hears me, it's going to turn red. It's my first green trade in a while. Okay. Look at the trailing stop. It's at break even. Okay, here we are at the profit objective practically. If I see some red, I'm banging this thing. I'm gonna bang one. Okay, yeah. So good to know, Minnie. What are you? Are you a futures trader? I would imagine if you saw the Nasdaq in the title, I would imagine you're interested in the Nasdaq futures, because that's what I focus on here. I'm using a prop firm account. I'm using an Apex account. It's an evaluation. I'm trying to beat the evaluation in a sustainable way. I have been experimenting, by the way. NQ, yep. All right, you're in the right place. I have been experimenting with, guys, how I always talk about uh, beating an evaluation is actually not that hard, but you have to use an unsustainable strategy. Well, I'm actually experimenting with that. And so far, I've blown a few accounts in minutes doing that, basically going all in. Let's see, with these 50K accounts, going all in with 10 mini lots and trying to make 15 points, right? But I would lose 10 points first. You lose 10 points, and literally, I'd open the account, and in minutes, the account's blown. So I'm experimenting with that to see, in theory, I should be able to beat an eval doing it like that. Now, why don't I show that? Well, for one, there's really not much to show. It's just like flipping a coin. There's no strategy. The only strategy really is sizing. Looking for any type of setup, because the Trade Scanner Pro is not going to be good in that situation. I'm selling one contract here. I'm taking one off the table because I don't want to give it back. It's close enough to the profit objective. Now I have my trailing stop. Let's see if the trailing stop, how long it keeps me in. The trailing stop is now above my entry price. So you see, guys, how waiting for that entry helped out much better, I think, just using that extra filter. So let's see if we can get beyond that profit objective. Remember, the trailing stop is never going to get you out at the top. It just helps you stay in the trade longer. That's the whole idea. So like I was saying, the Trade Scanner Pro is not going to be a good tool to use to go all in with. And the reason why is because, you have situations like this. If I bought 10 lots right here, right? This candle, I would have been blown out of the account right on this candle. So you say, okay, don't trade 10 lots, trade 5 lots. Well, yeah. So if I trade 5 lots, it opens up my risk gap more. I can afford to lose more, but it's just so easy. Let's just measure this little move right here. If I bought the top of this move, the top to the bottom of this move is 35 points on this 1 minute chart. Okay. If I have 5 lots on, I can only afford to lose 30 points before I blow the account. The account would have been blown right here. I would have taken that signal, account blown in 2 candles. So that's why you can't really use the Trade Scanner Pro for that purpose. The Trade Scanner Pro, it's not precise, right? It's just looking for general momentum. So you have to use other techniques if you're going to play that all-in game. Now remember, the all-in game is what I call it, is not a sustainable game. What I believe with these prop firms, to beat the prop firm, you have to have a unique strategy to beat the prop firm, and that's all it's for. It's to beat the prop firm, right? To get the payout account. And then once you have the payout account, then you go to the sustainable strategy so that you can take payouts. Because the strategy that you use to beat the prop firm cannot be the same as you use to take the payouts. At least, I mean, it can be if you can do both. But the thing is, the sustainable strategy naturally is going to take longer. And the thing with the prop firm is the longer you take, the more money it's going to cost. So you want to try to beat the prop firm as quickly as possible and then go to your slow strategy for the payouts. Right? That's the idea behind that. So and when you're trying to beat the prop firm with the unsustainable strategy, you have to realize that you're going to blow a number of accounts. Right? That's just going to be part of the deal. You have to be prepared to put some money in. So, it's in that regard, it's very similar to playing poker. You're sitting at the table, and if you're not taking any action, the blinds are going to eat up your stack anyway. So you're kind of forced to take action, right? And you're waiting for good cards, but if sometimes you have to just play average cards because otherwise it's just kind of pointless, right? But those average cards may turn into a win, or maybe you can bluff your way out of something. That's all part of the game of poker. You can't really bluff in this game here, but the idea though is, there's certain situations where you have to take a greater risk to accomplish something. Now, is it really a greater risk? I mean, how much money am I losing when I blow an account? $30? Sometimes less. It depends on if I got the account on sale, right? It could be like $16. Like, is that really a big risk? Now numerically, I'm blowing $2,500, right? But this is not real money. So sure, I could blow $2,500 all day long if it's not real, and it's only costing me, an average of $20. That's makes it worthwhile. Now, if you do it 10 times, that's $200. So, how many accounts do I have to blow before I beat an evaluation doing it in an unsustainable way? So I'm experimenting with that again because it's like the idea is use the unsustainable strategy to beat the prop firm, and then transition to your sustainable strategy. Now, one problem with that, because in these prop firms, of course they figured all that out. They know that traders are going to do that. And if you look at some of the fine print, and now if they hold me to this, like I'm doing this with Apex. If I beat an eval doing it the unsustainable way, and then they come to me and they say, well, you had 10 contracts on this trade here, you beat the eval, but then you switched to micro lots, that's inconsistent, so it doesn't count. If they do that to me, I'm going to tell everyone, do not use this prop firm, because that's complete BS, right? Because that's the only way to beat them. And if they say, well, you can't do it that way because it's inconsistent, then F you. Then not only F you, but I'm going to tell everyone else not to use you either. See how you like that. So, and another thing I realized while I'm waiting for this trade to do something here, like go beyond the profit objective or not. If you notice, All these fake gurus seem to beat these prop firms rather easily, don't you think? But if you look at prop firm statistics, it's like 95% of people don't beat these prop firms. It's something ridiculous like that, right? So how is it that all these fake gurus have half of them have barely any experience and they're using techniques that do not provide any clear advantage, but yet they beat these prop firms rather easily? How do they do that? You wonder? Well, I saw a comment once that basically implied that if you're a fake guru and you're an affiliate and you have a decent following and you're bringing in business, they give you free resets. Now, I don't know if that's true, but I believe it. Okay, it's a conspiracy, but I would not be surprised if if you have free resets. Do you know what that means? That means you could blow as many accounts as you want, reset the account. Ooh, I like that. Reset the account and start again. And you could do that all-in strategy that I'm describing, and you can beat account after account. Because if you blow the account, you just reset it and do it again. And you could do it hundreds of times for free. If that's a huge advantage, okay, if you get free resets. So if that's true, then that would explain why so many fake gurus beat these evals, right? And the financial incentive makes sense. You know, the fake guru looks like a pro. The fake guru brings in more business for the prop firm. Now realize, people, I'm not an affiliate. I don't have any affiliate links to any prop firm. So I can speak honestly, right? Because I'm not, you know, I'm not hurting any business relationships because I don't have any. I tried. I tried looking into. They're not accepting affiliates. The three that I looked into, none of them. They don't either. If they're not, they don't want me. That's for sure. Okay, they don't respond to emails. They tell me we're not doing affiliates right now. We're taking a break on that. We're going to hold off on that for a while. You know, like one of them was Take Profit Trader. I tried because they were getting a lot of traction. I'm like, okay, I tried them out. Like they're not bad. I sent in two applications, right? The first one, they said, "Oh, we never got it." Okay, no problem. I sent in a second one. I sent them a message on their support thing. Have you received my application? Yeah, we received it. Okay, cool. How long should it take? A couple of days. A week goes by. Hey, what happened? We never received it. I said, but one of your guys said you received it. So it's like, all right, they're playing games. So I'm not an affiliate. So anyway, so I can be very honest. All right. Yeah, Hussein. Anyway, so I'm just talking and I'm hoping the market doesn't realize what I'm saying, so it just keeps going higher. Because once I start talking about the market, oh, hold on a second, we can't make this guy. We can't let this guy make money. Turn it around. Turn it around, people. Wait a minute. This thing's at the profit objective. Can't have this guy make money. All right. So I'm just trying to give it a chance to see if we can go a little further. What time is it? Oh, it's after 10:30. Wow. So the ten o'clock candle screwed me up, as you saw. But look at the 10:30 candle. By the way, so let me mention this: the 10 o'clock candle, and I'll be wrapping this up here momentarily. Um, you guys know who I know Hussein knows, but for the people that are new, the 10 o'clock candle is very significant. Often news comes out at the 10 o'clock candle, but that's not the only reason why it's significant. The 10 o'clock candle establishes the opening range. So from 9:30 to 10 o'clock Eastern time is the opening range. And that, well, some people, they like to build strategies around that. I found that to be less effective, but there is statistical significance to the opening range. So what you simply do is you go to your 30-minute time frame, which I'm going to do here, right? Go to your 30-minute. Good thing we stayed long. We're back at the resistance. And you draw the levels on that first candle, which is the 9:30 to 10 o'clock, right? Which is this candle right here. This is the opening range. See that? That's that low and that high is the opening range. So we're still inside the opening range. But the way I like to use it is if we close below the opening range, right? We close below it. this boundary becomes a resistance, or it could be a support. Like we're above it. Ooh, that doesn't look good. May have to bang that out. I'm going to try to give it to the trailing stop. That's why I have the trailing stop in there. Man, see what I mean? I start talking about the market, it turns around. But the opening range boundaries become support and resistance levels. If we're below the opening range, it can become a resistance. If we're above the opening range, which we're not right now, it can become a support, right? So that's very helpful as the day progresses. Using it as like, okay, it broke out to the upside and then buying that, that's very tricky. I've never found that to be helpful, right? Because often what happens, you try to buy that breakout. Sometimes it works, but a lot of times it fakes out there and you get stopped out anyway, right? But there's fake gurus. There's countless fake gurus that claim that oh, I'm going to show you how to trade the opening range the right way, and you're going to make trillions of dollars, right? They all say that. I never found it to be effective that way, and I've tried. I've tried it. I've tried it with some rules and this and that. I just don't like the opening range. Plus, on top of that, you have to wait. I don't like waiting 30 minutes, an hour for what, just to lose money anyway. Like I really don't like doing that. That's why I like working on smaller time frames, because there's a lot more opportunities. And yeah, you're going to get stopped out more. There's more noise. But you know what? It's a lot easier to capture that one winner and then be done with it. If I could capture a winner, as you guys know, if my first trade is a winner, I'm done. There's no need to continue. With opening range, you got to sit there. The opening range has to be established. Then you have to see how it trades around. It takes the whole day. I don't not want to sit in front of my computer all day looking at charts. It's not worth it. Trust me, it's not worth it, right? Because it's very easy to give money back. Remember, you're dealing with costs and all kinds of stuff and a lot of noise. It's not worth it. My goal is to trade as little as possible, right? So if I can make in the first 30 minutes or whatever, if I'm up a couple $100, I am done. That's my day. And now I can focus on other things. Okay? So that's how I like to do it. These people that, now if you're a beginner and you're like, oh, I need to put in the time, all right, I guess it's good to put in the time just to get the screen time. But there's no way I'm sitting in front of this for 8 hours and trying to trade. There's no effing way. It's not worth it. A lot of times if I'm up money, I give it back anyway, right? Because when the market trends, well, like when there's a sustained move, great, you make money. That's when I make money. As soon as it gets erratic and indecisive, and I think and it's transitioning, and I continue to trade, I give the money back when it consolidates, basically, because it looks like it's going to keep going. Like over here, it looked like it was going to keep going, right? What if I was flat and I said, oh, I'm going to buy that, and I bought it, and now I'm losing money because it failed to keep going, right? Because I mean, and rightly so, we're at a resistance, so I shouldn't be that optimistic up here anyway. In fact, on that note, I may just blow this out. And plus, I'm now over my time, so let's see how the candle closes. Now, if you're using the Trade Scanner Pro, you can use the trailing stop to keep you in this trade until the trailing stop is touched. That's the whole idea. It's supposed to simplify your decision-making process, right? So theoretically, I should not be doing anything until this is touched. But I don't want to give money back, as you guys know. We touched the profit objective. So it's not going beyond. We're rejecting a resistance over here. There's a pin bar developing. What is this? That's a 30-minute pin bar developing. We have about a little over 15 minutes before this candle closes. So we don't know if it's going to close that way. Let me switch back to the 30-second here. Right? It's starting to look a little bearish there. Got a lower high in place. See that? So I may just take this. Yeah, I'm going to take it. Goodbye. All right, so I'm out. Let's see how much money I made back. Wow, look at that. I'm up $14. Now, for the guys that just joined, like, yeah, that sucks. I was minus $235 at the beginning of the stream. Okay, so that trade worked out, right? And I was able to put on 2 contracts back. I lost money. I had a 2-contract trade where I got long over here. Where was it? I got long over here somewhere. It was like somewhere over here. This blew me out. I took the next long trade and I made the money back. Okay, I'm happy with that. It's only $14, but at least I'm not losing another 200, right? So where is my P&L on that? Let me see. Yeah, so I'm still, all right. So I'm only $50 below the 50K mark, right? It's a $50,000 account. Well, theoretically $50,000. All right, you guys. So anyway, so good session today, good learning session. I'll leave you with that. Any questions? Do you have any questions about anything? For you new guys, if you want to try the Trade Scanner Pro out, you can try it out for 14 days. Again, you have to use it properly. If you don't use it properly, you're just wasting your time. Don't waste your time. Watch my streams first. I go back. I have lots of streams every Monday, Wednesday, and Friday. Watch them because there's a lot of training value in those streams. Each day, I show you how you have to set it up. I show you how you have to do the analysis, and then we take trades and we see how they play out. Today worked out nice. At least I'm green. At least, okay, not by much, but I made 200 and whatever dollars back. Okay, look, there's a signal here on the 30 second chart. But like I said, today I introduced a new filter idea, and that idea is don't take the initial signal, wait for the pullback and see if you get a follow-up signal or a secondary entry. That's how I entered this trade, by the way. This trade that just worked out well, right? I took the first trade over here somewhere because I waited for the pullback, right? Not here, I took it here. And then I put on a second contract on this candle. Well, before this candle closed strong, the way it closed, when it was on its way up, I took that second candle. So I was able to buy and add to the position on the way up. And then, that was a nice trade rather than buying at these bad prices up here, which eventually it worked out anyway. But you see what I'm saying? All right. So you guys follow? Any questions? Man, these numbers tell you, these numbers just don't improve, man. They just don't improve. It doesn't matter if I'm streaming for 3 hours. It doesn't matter if I'm streaming for 5 minutes. So, all right, I'm not going to rant about that again. So you guys, I will be back on at 3 p.m. Eastern time, and we will do some analysis. And also what I will do is we'll use the Trade Scanner Pro to see if there are any trades in progress that could be re-entered, or if there are any other re-entry opportunities that we can anticipate on larger time frames. We'll look at Bitcoin, we'll look at a couple of markets at that time. All right. So guys, if you're around, join me at that time and we'll go from there. So again, I want to thank you for taking the time with me here today. Thanks for watching. Enjoy your day or your evening, wherever you are in the world. And we'll do this again at 3 o'clock. All right. See you then. Bye.